Seeds of Wisdom RV and Economic Updates Friday morning, April 25, 25. Listen to the full version on the official dinarreport.com website and become our supporter on Patreon. Good morning Dinar Recaps. XRP News Today. Ripple rejects 2025 IPO despite SEC win. Here's why Black Small Square Ripple confirms no IPO plans for 2025 despite previous speculation and legal clarity. Black Small Square's strong financial standing and strategic acquisitions negate Ripple's need for public offering. Black Small Square Ripple focuses on growth through acquisitions like Hidden Road to expand its financial reach. XRP News April 25. Despite years of speculation and growing chatter in the crypto world, Ripple has officially confirmed it will not go public in 2025. The company behind XRP has decided to take a different route. Even after settling its long legal battle with the U.S. Securities and Exchange Commission, SEC. Why is Ripple's IPO delayed? In a recent interview with CNBC, Ripple's president Monica Long made it clear. An IPO just isn't part of the plan. She explained that Ripple is already in a strong financial position, holding billions of dollars in cash. She added that most companies go public to raise capital or gain more visibility. Ripple doesn't need either right now. CEO Brad Garlinghouse echoed her view. He confirmed that Ripple is not seeking outside funding and has no plans to become a publicly traded company anytime soon. The IPO talk has been around for years. The idea of Ripple going public has been a hot topic in the crypto space. Back in 2022, Garlinghouse said an IPO would be considered after the company resolved its legal issues with the SEC. That moment finally came in late 2023, bringing some much-needed clarity. But even after that, Garlinghouse made it clear, going public is not a top priority for Ripple. Ripple's valuation has shifted, but its strategy is strong. Earlier this year, Ripple repurchased shares at a valuation of $11.3 billion. That's a drop from its $15 billion high in 2022. The share buyback raised $285 million, pushing Ripple's total funding to $318.5 million. The company's investors include major names like Andreessen Horowitz, Google Ventures, and founders fund Proof. That confidence in Ripple is still strong. Acquisitions over IPOs. Ripple's new playbook. Rather than focusing on an IPO, Ripple is expanding through strategic acquisitions. Its biggest move so far is the $1.25 billion purchase of Hidden Road, a prime brokerage firm that handles around $3 trillion in annual transactions. This deal is expected to strengthen Ripple's new stablecoin, RLUSD, and help the company grow its role in global finance. It's a major step toward building Ripple's influence in the digital payments and blockchain infrastructure space. Some XRP holders may have been hoping for an IPO boost, but Ripple's approach shows confidence in its long-term direction. The focus is now on building technology, expanding reach, and leading innovation in cross-border payments and stablecoins. For those tracking XRP price trends, crypto market news, or stablecoin developments, Ripple's evolving strategy is worth keeping a close eye on. Federal Reserve withdraws crypto rules for banks, ending choke point practices. The U.S. Central Bank will now treat crypto like any other banking service, instead of approaching the industry with particular caution. The Federal Deposit Insurance Corporation unexpectedly released a trove of documents on Wednesday detailing how the agency regulated banks' approach to crypto. Travis Hill, the FDICS's acting chairman, said the agency is taking steps to enhance transparency as lawmakers move to investigate a plot dubbed Operation Choke Point 2.0. The documents that we are releasing today show that requests from these banks were almost universally met with resistance, he said in a press release. These and other actions sent the message to banks that it would be extraordinarily difficult, if not impossible, to move forward. In December, the FDIC published 24 letters detailing the agency's push to delay or prevent American banks from engaging in crypto-related activities. But this 790-page batch of documents appears to contain correspondence covering banks' ability to serve crypto firms as well. In one letter, an FDIC appointee acknowledged that a bank's board of directors had chosen to close all of an entity's deposit accounts. While the entity wasn't explicitly referred to as a crypto firm, the letter also sought additional information on the bank's internal authorization to engage with up to a maximum of 3 additional crypto companies. The letter also said that banking organizations are neither prohibited nor discouraged from providing banking services to customers of any class or type, but industry advocates have claimed the correspondence was further proof of the FDIC's debanking plot. The documents were unveiled shortly before Senate lawmakers began a scheduled hearing on debanking. So far, it's been giving the public a first look at whether the FDIC unlawfully clamped down on the crypto industry. Bitcoin and reputation risk. One snippet, highlighted by Coinbase chief legal officer Paul Grewal, showed how a bank was deterred from offering an account to a stablecoin issuer looking to park reserves at the institution. The bank was told that it should not proceed with any crypto asset activity until the FDIC and another entity, the name is redacted in the document, found the practice was safe and sound. In one case, Grewal said the FDIC did not raise concerns about risks to the financial system, but he did think it deterred a bank from offering a way for customers to purchase Bitcoin. In an excerpt, the FDIC stated that reputation risk or the prospect of Bitcoin's price falling was at issue. Though the conversation among lawmakers has focused intensely on the FDIC, which ensures banking deposits and supervises financial institutions, the Federal Reserve recently weighed in. A week ago, Fed Chair Powell stated that banks are perfectly able to serve crypto customers, as long as they understand and can manage the risks. Some letters included in Wednesday's document dump accused banks of false advertising, claiming that they did not include clear and prominent disclaimers that digital assets are not covered by FDIC insurance in advertisements. On Wednesday, Hill signaled that more documents may be in the pipeline, as the agency moves to reverse practices under the previous administration. While this review remains underway, we are releasing a large batch of documents today, he said. Looking forward, we are actively reevaluating our supervisory approach to crypto-related activities. Listen to the full version on the official dinarreport.com website and become our supporter on Patreon. Source: Dinar Recaps.